Good morning, everyone. So markets are up here, gapping higher, right up into resistance on this jobs data. All we need now is a green light to remove the mask at some point. We might really have a rally. Anyway, as we look at the S&P 500 here, the spiders, prices have moved from the bottom of the range to the top of the range. And they're gapping to the top of the range, which leads to me to a historical thought: sell the news. Prices having run from this lower level. I'm just got a pointer out here. From the lower level where it made sense, buyers would step up, and they stopped right at the gap fill. Right? Yesterday, they paused, and now on the news, they're gapping up to the top of the range. And fill the gap up here? Maybe, trader, maybe. I mean, we can see where they're at. They haven't backed off yet. Looking at the 5-minute chart, we'll look at the futures, but they haven't started to back off, so maybe they keep going. What we look for in a situation like this, right at the open, or probably within 2 to 5 minutes historically, is that you get this spurt of buying and then a failure. I mentioned a gotcha type of trade. We looked at this about a week or so ago here in the room, where there's this attempt to continue to move. Yeah, I know Qs have been leading the way. They're at all-time highs, and what a perfect scenario to catch longs here. And so we'll see how it plays out. So again, gapping up to the top of the range here from the bottom of the range, and then it gaps her up to the top. It's just a classic situation for sellers to come in, especially in front of the weekend. So we'll see what happens. So that's a thought. That isn't reality yet. So what we have to see on a smaller time frame, like the 5-minute, is an attempt to pop higher and then fail. Right? It could just gap up there, and what was it, a week or so ago? Was it last Thursday? There was the gap up, and then it selling right under the 5-minute low. It just went down all day. So we don't know that that's what's going to happen here. Investors, traders are a little giddy here, even in the face of more Corona BS. Everybody I talk to thinks the whole thing is a joke at this point. Anyway, let's look at the futures. And so we see the complete bar. And now we see yesterday was a consolidation day, more or less, with a candle body narrowed. It became smaller, the momentum slowed. And then as it started to push up, and then on the news, happy times. So right up into the resistance area. And so with a move like this, I mean, common sense is we're not going to chase it. Well, it just, the move started even here from an intraday point of view, and it rallies up into this area of price resistance, and we've got a wide range bar, signaling at least a slowing in momentum, if not the end of the move completely. So we shall see. This is definitely not a place to be pressing the accelerator on the long side, where prices have, from a longer term perspective, and we know the spiders were down lower here, but you got the reversal, and now it's rallied up into resistance. And if it's going to go higher, let's just consider this from the bullish point of view, that yeah, the 100% retracement is bullish. Well, what is it going to do now? Do you buy it here as if it pokes up above here, and do what? Well, you could put a stop below the low of the day, because you don't know. It could pull, who knows where it'll pull back to. Or you can just wait and see, even if it pokes up, does it pull back? Does it consolidate? And of course, what's the risk that there's some blow off and it just keeps running? Well, that's where if you have the experience, if the day is a day like that, you can come down to a smaller time frame and look for pullbacks, corrections, bases, so on and so forth. In any event, the higher time frame being at resistance in this kind of a run tells us that there's risk on the long side. So we'll see how it plays out. So with that being said, SPX, another zero data expiration up in this area, what we want to see is one of those gotcha situations to sell the call side, maybe up above 3,200, above the gap here, if there's premium. So it would actually be ideal if buyers would step up at the open and maybe push it higher for 5-15 minutes and get slammed back down again. So Trader McGraw is telling me 32.50 this premium. You think so? Well, if it opens, right, we go back to the futures. Well, we'll see. It's still half an hour, 20 minutes to go, whatever. It's starting to back off a little bit here, but that doesn't mean it won't try and go up. Because historically, that's usually what they do at the open. They just try and suck in the idiots, right at the open where it gets, it just pops one more time, for the first 5 minutes and then slams it back down again. Well, we look for patterns, meaning I can see what is right now. Obviously, I can't see the future, but I know historically the type of patterns that occur in scenarios like this. And there are a few, of course. And so I'll wait to see which one materializes, in the first 5 to 15 minutes of trading. The Qs have pushed up to an all-time high. They've gotten, so now in this situation, do we have a completely different scenario as far as possible stall in momentum? And the answer is no, because here we had the move down, the gap reversal, and this concept, what we call a greater than 100% retracement, right, where it took out this low and then came up and took out that high. And historically, this is where the momentum stalls. And doesn't mean it can't go a little bit higher, right? But that type of a pattern historically is where momentum slows down. And does momentum mean it's coming back down here? Nope. No, I don't know that. But if today turns out to be a red bar, right, a topping tail bar, some type of reversal, or even if we see that on Monday, remember what we've been talking about, how to read slowing momentum. Right? So here we see the momentum pick up. The momentum slowed down compared to here. So those of you that maybe still use indicators and still on the, the indicator-based methodology, still with the training wheels and seeing your bearish divergences here. Well, if this turns out to be a red bar or we get one on Monday, right, the distance between these highs is going to be even closer. And your indicator will give you a third bearish divergence. However, it's still making higher highs and higher lows, and momentum is slowing. So this is something you should remove from your chart. This is going to be in an uptrend until it violates this. Momentum slowing down tells us that it's getting tired, right? But we don't have a red bar here yet or a topping tail. Right? The day is beginning. All right, let's get the squiggly lines gone. And see where the Dow is. And those are the Dow futures. And they're not at the top of the range. So they're showing some relative weakness compared to the S&P. The 200 is lurking right up above. Same intraday patterns, pre-market. Maybe this plays some catch-up, meaning it shows some relative strength this morning to push up to that resistance area. So part of the takeaway here is everything so far, things are pushing up, or they're there. They haven't faltered yet. This wide range bar tells us to be careful. The other markets that we see are up at resistance, tells us to be careful on the long side, and we'll see how it plays out. See what the Russell's doing. It started showing relative strength the end of last week. And when we started this week, it showed strength. And now it's gotten weaker again. This is just a weird, I don't know how else to explain it. It's just a weird index. It's, small caps and such. But I say it's weird because even intraday, there are times where it's just leading the way up. And what were the leaders are they're lagging and doing nothing. And then the laggers all of a sudden wake up and they're saying, hey, the little guys are leading. We better follow. And then all of a sudden the big ones start moving and the little guys, they stall. So kind of strange, but it is what it is. And you can see they're starting to come in here a little bit more. They got some little bit of room to get up toward the highs there. So still same wide range bar on the news. And bonds are coming in a bit here. And it's rolling over. They hit the resistance area coming in. So yields are coming up a little bit. We actually want to see that happen longer term. Oil, it's been in the trading range, but holding up here for a few weeks now. And so it'll be interesting to see what oil does. If you're looking at USO, looks like this, set an alert up here and down below. You don't have to watch it, but be good to know if oil starts to break out or break down. Little heads up for the market. Totally makes sense with equities moving up that, gold's coming in a little bit. Doesn't change the view long term that this should continue to move up. It's had this long period of resting and it broke out a couple of weeks ago. And that's the monthly chart there in the lower left. So it's coming up to this long-term resistance area there. So maybe, I don't know, you could see if it stalls here a little bit more, but it still looks bullish long-term. It's got a nice base. As long as it doesn't come all the way back down here, my expectation is that it's going to continue to go higher. And just lastly, the transports. Gapped up and got knocked back down. What is this? Something different there. Anyway, transports, kind of the junk for now. You can see the monthly obviously is still in a downtrend and potentially going to form a sell setup here. Let's look at the weekly. Just kind of, and we apply our method, our factory work, and it's still in the bottom part of the red bar. So nothing great there. We'll see if this can perk up here and maybe some of those airlines and rails and so on, they push up, and we'll see if they do, how far they can get into that big red reversal bar there. And let me just look at the weekly here. So no big deal there. No change from the weekly perspective on the Russell. Obviously, the Q's pushing up above that topping tail, but you can see all of these candles, how while they're moving higher, you can see how they're all clustered around the same place. So there's definitely been a big change where the momentum was moving higher here, whereas over the last month and a little bit, there's been a lot of choppy consolidation with attempts to go up that get knocked back down and attempts to go down that come back up again. So technology, that sector still leading. And the semiconductors, it was yesterday, were kind of shaky. They were starting to roll over, and just making me curious. Look at SMH here for a second. Yeah, just chopping around here, and I don't know. We'll see if this could break out. That would be a positive sign if it breaks out today and can stay above that base. So this is something that should be kept an eye on. Either trading this index, or just as a general market idea. If this breaks out and comes back in, or it doesn't participate at the open, and you see this breaking down at the end of the day today, that'll be a bearish sign for the market. If it can close up above here, that's a positive. McGraw's asked me on SPX, 3090 or 3100 down below. No, I don't want to get that close. I mean, if I see a gap in crap, no, I'm the call side. 31 sell put spread on the idea that we won't be negative today, that it holds up. Well, let's see. You've got this hourly red bar ignored, bullish 180 reversal here on the hourly. So if it stays up there, so you know what we look for. You've been with us a long time. So let's assume that it goes up here, right? It's going to go up there. We know that. And rather than break out and come back in again, right? It hangs up there. And it does what the Qs did on Monday. It breaks down in the first 30 minutes and rips right back up to the upside. So we're looking for something to support a bias that prices won't go in one direction or the other. Right? It's relatively simple. So for 3100 and 3090, for us to feel relatively safe that is going to hold, we want to see some kind of a failure up here to go lower. And if we see that failure, we say, well, hey, it went from the bottom of the range to the top of the range, but buyers don't give a darn, and they're going to keep buying the dips until something bad happens, right? Something more severe. So, or let's just say it's not going to happen today based on that piece of information. So if I was to see that breakdown failure, we can go back and look at Monday, which was this, and on the futures, it looked certainly more ominous because it was going sideways, and then it broke down and it ripped right back up again. So I don't think we get anything as big a bar like that. But if they spiked down and we got a bar something like that and ripped right back up again, then my bias would think, hey, the put side down there would be okay. It's really all common sense once you have common sense tools. Indicators are not common sense tools. When you start drawing trend lines and fib lines and extensions and Elliott waves, you're not dealing with common sense. You're dealing with hocus pocus. Let me sell you the latest, greatest indicator, and let me teach you how to optimize those trend lines and moving averages and so on and so forth. We base our decisions on reality, what is, not trying to massage something to make it look like what we want or what we want to tell somebody else what they should be thinking. That's what all these guys are doing on the internet. They create these indicators and they're trying to tell you that their latest, greatest indicator is going to tell you what to think and make money. You don't need it. Just look at the darn chart. Anyway, it's all yours, Dan. The end of the week.
Hey, you're on a roll. Keep going. Hey, I like that capitalism. It's all common sense when you have common sense tools.
Dan, this industry, which I've been part of for 30 years now and was a victim of, back, to some extent, it wasn't like it is today, but it was the same indicator bullshit. You know, when I opened up my first trading platform, or it wasn't trading platform, it was a charting platform, you know, back in the late 80s. And it's the same crap. And they're, you know, they're shoveling out the same crap, you know, exponentially today.
Because I think the industry churns and they just keep finding a new batch of people to sell their goods to. All right. All right. All our opens look fine, and we have a ton of opens in the swing ladder. So I want to go to the gappers first. If you have a specific question on an open, just ask me. I'll come back to it if I get through all my gappers here. CAR 2550. That's a definite put spread candidate. If we can get something here, it's moving right now. I saw in the news that some 5 airlines have secured, you know, new loans with the government. Everyone's all happy with the jobs report today, but the announcer, I think Joe Kernan, and then whoever he was talking to, they're like, this is meaningless. You know, nobody knows what's under the hood with all this fake government support. And I agree. I keep shaking my head, but we got to trade the charts. Nobody knows what's behind the curtain. I tried going to dinner last night to one of my favorite Italian restaurants, and another one bites the dust. They're out of business. The gym, I joined a new gym yesterday, the size of a supermarket. And I've never seen more than a dozen people in there at once. How are they going to, is that a sustainable model? Pixie here. Wow, this looks like pump and dump. You know, look, his marketers work every couple of weeks. He's like, all right, you ready? Get ready to sell. And now it's doing, well, it's only gapping up to 6 here only. I got no interest in a stock like that. Ballard is one of our opens. We're getting a nice gap, 1, 2, 3. So I moved the stop break even. Plug, gapping up at no pattern. BNTX, this was a little bio. I sold the $30 puts a while back. No pattern now, it's a mess. Unless you can get those short puts again. Neo, yeah, you know, it's gapping from up 3 bars. You know, every time I see this chart, we were in it at $4. You're just chasing now, Cameron. There's no setup. Neo for shares long if breakout. That is not, we do not trade breakouts that run from the bottom of the base to the top, far from the 20, gapping up. That's something, Cameron, we would sell into and take our profits. Here's the breakout that we want. Multi-month consolidation, higher low, right here at the rising 20, wide range breakout, multiple time frame alignment. This we bought long yesterday as a breakout. So big difference. Hib's a gap breakout. That one's where I just don't like these overlapping bars, so I don't trade things like that, but it is a gap breakout. So that would, for me, that would be a no-brainer put spread. If you can get something under here. JD for William. Yeah, that's another gap breakout. That's worth watching. Yeah, that's a gap breakout, sure. Let me write that down. JD. Microsoft. Yeah, it was all-time highs yesterday. It's as long as the NASDAQ keeps plowing, that will. But I'm with Greg. I mean, a big gap up like this after 3 days, I mentioned in the nightly video, I said that, you know, I think the easy money on at least on these fangs, you know, we had, look, this is a W bottom, higher low retest, igniting. and the 15 minutes been on a tear. And now we're gapping up, and now you want to get on board this thing? Absolutely not. That is not our strategy. I just blindfolded. My bias is just sell 0 DTE call spreads on all these things, 30-minute low. Call me if you need me. I'm at the beach. All these extended things, and we're gapping up. So that's my bias, is call spreads. You know, look at Tesla gapping up over $100. Somebody asked me yesterday, I think right in here, does Tesla look higher? And I said, sure does. It's at all-time highs. Another beautiful bottoming pattern down here, and then boom, June 29 in the afternoon started. Yeah, no, I got call spreads on my head. Fran, I mean, what do you want to do with Fran, TJ? I mean, I don't know what to do with it. So I just move on. I'm looking for tier 1 setups, which are actionable. So I mentioned a couple of them. Carr, Hib, JD as put spread candidates. Brenda on YouTube's asking about light. Light, it's what we call a red bar ignored, but again, this is an example of it's extended, and then look to the left, resistance. Look to the weekly, you're in a trading range, but look at all those tails. It's gapping right to resistance. So I have no interest in that. Yandex, it's light volume, so it's kind of hard to tell. It's extended. It's bullish consolidation, Paul. I give you that, but I only like doing that. I like these patterns when they're closer to support. And then also the market internals. I am not interested in longs here. So keep them coming. TZA, yeah, that's a levered instrument. Oh, we actually shorted a call spread on VXX yesterday. So that's doing nicely with the market gap up. Ludwig, that's a good question. Maybe Greg can answer you, because I would have to look it up on his scans. But Greg, actually, you know, we got an email yesterday. I think I copied you on. What do you call this significant gap percent-wise? And I think it's different on an ETF. ETF, I'd say 1%, but
markets 1% historically.
right.
In this market, hasn't been uncommon to have a 2% gap.
But what about stocks? I mean, and
stocks, the scan is just set up to be greater than 0.9%, and that's just a starting point. It'll bring up plenty of things in the scan that might be gapping up 15%.
Sure.
And that, you know, and so you just look at the pattern. If just because it's gapping up big doesn't mean it won't keep going higher.
Right. Job, look at that, gapping up 200%. So never heard of the stock. Tesla, we talked about. Tehran's asking about Splunk. Yeah, I mean, that's a beautiful close for a continuation. So my only caveat is the overbought market. But if the market weren't overbought, then yes, that's a beautiful close from consolidation. See how it's not far from the 20, unlike some of those others I vetoed. So yeah, maybe 30-minute high if the market decides to keep going. And someone's asking about APT. It's not bad. It's a buy setup. It's not bad, but I would want it to take out a prior bar's high. But that is a buy setup. It went up, 3 red bars, bottoming tail. Yeah, that's worth watching. But like I said, over a prior bar's high. I'll just keep going here and I'll keep an eye on opens. You know, I'm only looking for things that are up big or down big to see if I need any adjustments. We're in SNX, covered call. Nicholas fine, the Lilies flat. ETFC, we have a half lot. Now that looks like we can add the back half next week. CVS, we have an Iron Condor that expires today. BBY, we have a covered call, and I said let it get assigned. Let them take our stock. DLR was on our watch list yesterday as a breakout.